Well, good afternoon, everybody. Hello, and thank you so much for joining us for the first Mobile Monday of 2022. I'm Jessica Hughes, Chief Operating Officer with NC Realtors, and I'm so happy to welcome all of you on behalf of NC Realtors Appraisal Section. I'm honored to welcome today's speaker, Peter Gallo, who's the chair to the NC Realtors Appraisal Section. Today, Peter's going to discuss some best practices that realtors need to know while working with appraisers. Peter, welcome.
Hey, thank you. And just have to work through a few things here on my screen, but thanks, Jessica, and Happy New Year, everyone. I'm honored to be the first guest of the year on our first Mobile Mondays session of 2022. The appraisal section thought it would be helpful to continue our conversation between realtor agents and brokers and appraisers to help explain the appraisal process and to demystify what is and is not allowed when an appraiser is hired for one of your transactions. Before we get started, I want to let everyone know that NC Realtors staff will be pasting two links, and I already pasted them on Facebook in the session to helpful resources that the NAR Real Property Valuation Committee developed in order to help agents and homeowners better understand the appraisal process. So you can use those links for your future reference. So let's talk appraisal. All appraisers have to follow something called the Uniform Standards of Professional Appraisal Practice. That's this book here. And some states only require adherence to USPAP for federally related transactions, or FRTs, but in North Carolina is a mandatory state and requires all residential, commercial, and review appraisals to comply with USPAP. So, and our state licensing board is the one that enforces everything in this book. And so appraisers need to follow, there's ethics and standards rules in here. One of the main parts of USPAP is the ethics rule. So I'm going to share my screen if I can find it here. And this is page 1 of the ethics rule in this book. So language is very important in this rule. And I'm just going to read the first line. An appraiser must promote and preserve the public trust inherent in appraisal practice by observing the highest standards of professional ethics. And this is so important for you to know and understand when dealing with appraisers. Under the conduct area here, please note that an appraiser must not perform an assignment with bias, must not advocate the cause or interest of any party or issue, must not accept an assignment that includes the reporting of predetermined opinions and conclusions, and must not misrepresent his or her role when providing valuation services that are outside of appraisal practice, and must not mislead, must not commit fraud, et cetera, et cetera. So these are all, this is something very important. These are ideas that are very important to know when dealing with an appraiser. So also the residential appraiser, who's also a member of the National Association of Realtors, is also a member of North Carolina Realtors and of their local association, and thus also must adhere to not only the NAR Code of Ethics, but any other guidelines of their local realtor association. So it's also important to know that many appraisers are also licensed brokers and can and do have sales experience. And it's important for the appraiser to clearly expose which hat they are wearing when interacting with the public. So the role of the appraiser, we're not advocates. We're hired by the client to be an unbiased third party. This is what gives the market confidence that a state certified, unbiased, unrelated third party has observed and given an opinion of value on a property that is the collateral for a loan. These loans are bought and sold by investors and allow not only for the existence of the 30-year mortgage, but bring stability to the housing market and the economy overall as buyers and potential sellers look to take advantage of the equity in their home and build wealth. So let's talk about, in light of all of this, let's talk about communicating with the appraiser. There are kind of two periods of time where interaction with an appraiser are different. That's before the assignment is completed and after the assignment is completed. So before the assignment, first and foremost, in any way, you can't pressure the appraiser. But other than that, before the assignment's completed, when an appraiser is calling you to set up an appointment, if you're the listing agent, or calling you, or you want to provide information to that appraiser before the assignment's completed, that's totally fine. Any market information, CMAs prepared for the listing, sales that the appraiser you think might not be aware of, any things that's not readily visible or available to the appraiser that might affect value. It's really up to you can give all that information to the appraiser, and it's really up to the appraiser to filter out that information and decide what is credible or relevant to the development of the appraisal. So after the assignment's completed and sent to the client, first, who is the client? Just because somebody's paying for the appraisal, maybe the borrower's paying for the appraisal, that is not the definition of the appraiser's client. The appraiser's client is whoever engages the appraiser, not who pays. So when we get an order, when we do that engagement, that original engagement, that we're doing that with our client. And the appraiser is liable to that client. And so liability, what does that mean? Well, information in the report, when we deliver the report, that's confidential to the client. Now, if the client decides to share that appraisal with other parties, that's up to the client, but the appraiser is not allowed to do that on their own. So if you get a copy of the appraisal, and you might be thinking, can I call the appraiser? Well, you can call the appraiser, but the appraiser is not able to disclose any report results. They can talk in generalities about appraisal concepts and that type of thing. But as far as specifics from that report, any report results or opinions in that report cannot be discussed. They can only be discussed with the client. So after the appraisal is completed, any concerns really need to go through the lender, which is normally the appraiser's client, and then provide that information if there's sales or reconsideration of value, that type of thing. That needs to be done through the lender. But to avoid a lot of that, appraisers would much rather get a lot of that information up front. This way we don't have to go, there aren't as many questions after, and we don't get a lot of these callbacks. The most important thing to an appraiser when they produce a report is that it's credible, reliable, that it's accurate, and that we didn't miss anything. That's really an appraiser. Kind of the worst nightmare is to find out that maybe you've missed a sale on the same street or something that's really relevant. So anything that can be done prior to the assignment to help that appraiser out with any data or any observations that they might miss or you think that they might miss is very important. So how are appraisers selected? Appraisers should be selected on competency, on quality, their experience. But as we know from Dodd-Frank, and where appraisers can no longer be engaged directly from loan production staff, third parties have come into play where they order, or lenders develop their own rotations. So now you have kind of a combination of appraisal management companies with their rosters, or lenders with their appraiser rosters that they do a rotation on, selecting an appraiser and engaging an appraiser. A competent appraiser will have general local market knowledge and the ability to obtain and analyze specific market data. So the appraisers that are working on an assignment should really belong or have access to the local MLS where the property they're appraising is located, in the case of a residential appraisal. In commercial, I'm not a commercial appraiser, but commercial, there are other sources like CoStar and other databases that are available and that commercial appraisers subscribe to, because they aren't necessarily, they can pull sales as comparables from a much broader base, especially when appraising unique properties like golf courses, airports, that type of thing. There's a need to go outside of the local market and to find properties that have sold that are comparable. So with that in mind, appraisals aren't magic. We all have the same data. Agents and brokers in the field are using the same MLS data that we are. So if you think there's going to be a problem with the appraisal, there probably will be a problem with the appraisal. So all the more reason to, at the time of the appraiser coming out to observe the property, maybe meet the appraiser and provide them with a packet. Again, you're not pressuring the appraiser, but you're certainly giving them information, market data information, things that you used in maybe your listing, or just your general knowledge of the property and of the market locally. So when we talk about selecting, let's talk about selecting sales as comparables. So appraisers often use the concept of bracketing. When an appraiser approaches value on a unique property, what you are doing to begin with is you're kind of trying to find sales that you know are superior to the property you're appraising, and then also looking at and figuring out what are definitely inferior properties. And then you're trying to squeeze down on that, especially on unique properties, and find the data in between there and further refine it until you have sales that you think represent all the characteristics of the property and that bracket the property, that maybe they're a little bit bigger, a little bit smaller. They have, if you have a house that has a water tower that you're trying to appraise, that you try and get another sale as a comparable that has something externally like that that's also affects that property that has sold, and you can see how different external issues affect the value of the properties in that neighborhood. And in that light too, we can't just consider the high or the low sales. We must consider all sales for use as comparables. A lot of times we get that in reconsideration of value, which I see there's a question about reconsideration process. A lot of times we're confronted with a reconsideration of value or information from a party that's maybe not an intended user of the appraisal. It's not the client, it's the listing agent, or it's some other person or party. And a lot of times what we get are just the high sales, or just something, some information that is asked to be considered on a specific either range of value or aspect of the property. And we really, as appraisers, we look at that and we can tell when that's the case. And really, we have to be looking at all the data. We cannot just be looking at, and even if there's one sale on the same street that's sold, and we might have used that, we should probably have used it, and if it's similar in most respects, it's still one sale, and one sale does not make a market. We have to go and give a broader perspective to that one sale, which means using more quantitative data and then drilling down and using the more specific sales as comparables. So yes, I do recommend the listing agent meet the appraiser at the property to provide documentation, or leave it on the counter. We have, that happens a lot. It's helpful. You might want to do that because it's a little less I don't want to say confrontational, but just leaving it on the counter makes it more convenient. And, you know, an appraiser is a professional. They should be professional when interacting with other people in the property. And again, they are the ones that are going to decide in the end what information you're giving them is credible or not credible. So appraisers should be receptive to that and receptive to you being at the property and giving information. And so you're not doing anything wrong by doing that. So just don't pressure the appraiser, and you all, I'm sure, know what that means. So as far as adjustments go, we get a lot of questions about adjustments. Adjustments are the real black and white of it is the paired sales approach or method, where you have two identical homes next door to each other. One has a fireplace and one doesn't have a fireplace. And the one that has a fireplace sold for $3,500 more than the one without. Well, there's your adjustment, $3,500 for a fireplace. But that obviously does not happen very often unless you're in a new development and there's a lot of very homogeneous homes being built. But even then, there's variations on trim packages. And when it comes to adjustments, there's a couple things. What you want to do in appraisals is bracket. So you have higher and you have lower. So a lot of times you can use those sales. If there's a higher one, there's a bigger one, a smaller one, as far as square footage goes or gross living area. You can just let those sales speak for themselves, and you can see the range that's there. And when appraisers start putting too many adjustments in to report, it starts to become less credible, less reliable, because, you know, we need to support those adjustments. So if an appraiser is making an adjustment, we really need to be pulling those out of the market or doing some sort of depreciated cost where you know what it costs to install like something like a pool, but then you have to really figure out how that item contributes to the overall value of the house. And that's sometimes difficult, but cost, and again, cost doesn't always equal value. So what a pool might cost to put in now today, and in certain markets, pools are overwhelming. It might be very, very desirable, and they might add more than what they cost to put in. In other markets, maybe where an HOA has a pool and a pool isn't really that what's the word, desirable, or not desirable, but isn't such a huge selling point, the market will show that. And it will also, it just won't be, that cost might not equal the return that you get in the value. And then too many adjustments in a report can often be a red flag for underwriters or reviewers. So there were variances that we used to have to address for the GSEs, which still are good guidelines today, where you don't want one line item adjustment to be over 10% of that comparable sales price. You don't want a net to be over 15% net adjustments, or a gross adjustment of over 25%. Once you start going over those kind of variances, an appraiser really starts to need to look at whether that sale is truly a comparable or not. When you talk about, I see a question about new construction and the interior amenities and finishing, how does that weigh on value? It can. What we're often seeing though is it's hard from an appraiser perspective, because a lot of those specifics aren't available in the descriptions of the listings by the builder in the MLS. What you get is you get a lot of representative photos, generic language. So what the appraiser is doing is really looking at the size, the quality, and they really need to drive by and look at and know that development and talk to the builder about what they're, and look at contracts and see what they're getting for the different finishes. And that's the thing too, an upgraded trim package, or maybe an upgraded hardwood from maybe a lesser hardwood to a more a superior hardwood, or maybe a little more costlier. It just depends. It really depends on it, the overall, what the subject, with the appraiser, how the appraiser sees the subject and when they inspect it. But also we're looking at really quantitatively. Usually there's a lot of data in these new developments, and you can see trends, and you can see that the big factors are the garages, 1-car garage versus 2-car, the amount of bathrooms, the square footage. And then you're also trying to find resales of existing homes in that area, because sometimes one builder in a development can control that market and make their own market just with their own homes. And that's something that's very important for appraisers not to get sucked into that. They need to look at the overall neighborhood and values of existing homes, and how those new homes in that entire neighborhood are impacted, or with their place in that entire neighborhood. So that's something that we have to watch out for. So let's see, measuring homes. So appraisers aren't professional measurers. Fannie Mae, although, will be requiring all appraisers this year to be utilizing the ANSI standards. But appraisers don't measure homes. They measure homes in order to get a good, credible basis for the subject size, and to support how big they're saying the home is that they're appraising. So if I say I personally measured it, I know how big the house is, and I have those requirements to report on. So it's also good as agents and brokers to know how to measure. I know a lot of agents and brokers use third-party measuring services, but you really do also need to know how appraisers measure, how to measure a house, so that you're all speaking the same language. And with that comes also the term gross living area versus square footage. So gross living area is a term that appraisers use for heated living area above grade, where square footage can mean a lot of different things. A lot of times in blueprints or assessors can include porches, garages, and just lump it all into square footage. So know that appraisers look at gross living area, which is a specifically defined above grade heated living space. And that's why price per square foot's not always a reliable method of valuation, because price per square foot can mean a lot of different things. And if you just base a value on price per square foot, well, then there would be no difference between 1,000 square foot basic ranch in a neighborhood versus 1,000 square foot waterfront on acreage with outbuildings and a dock. So there's different quality, different locations, a lot of differences, where just valuing price per square foot would not take into consideration any other factors. So I know I've talked a lot. There's a lot more that I can go through here. Basements, listing like current trends, listing homes in the current kind of volatile market. One thing I did want to say, though, is don't ever tell an appraiser, or don't ever characterize an appraisal as a low appraisal. Low. And an appraisal is accurate. It's accurate or inaccurate, credible or not credible, reliable or not reliable. Those are terms that appraisers respond to and appraisers understand. When you're saying low, that really is just from a perspective that an appraiser is not allowed to really come from. We have to be unbiased third parties. So our whole goal is to be accurate, to be credible, and be reliable. So there's a question here, what percentage of our desktop appraisals these days, and how is it decided which will be a desktop? I don't know that. That's data that is not shared. Maybe the GSEs could share it, or it's out there somewhere. I don't personally know. Usually it's decided by risk, whether there was a previous appraisal done on the property, whether there's a large amount of money being put down on the loan, and credit scores, the history of the borrower, that type of thing. That's usually what comes into consideration with whether or not some sort of alternative valuation is used on a loan. So it's about 1:30. Are there any other questions? I think we're good. So Jessica, could you tell the attendees how to get in touch with Denise Daly or NC Realtors if they want to learn more about the appraisal section?
Yes, I would be glad to. I've got information here. If you'd like more information about the NC Realtors Appraisal Section or the material that Peter's covered today, we'd welcome you to contact Denise Daly, who is the staff liaison to the appraisal section. That's ddaly@ncrealtors.org.
And you can always get a hold of me if you have questions on appraisal. I'm in the Facebook group. Just shoot me a private comment, private message, or public, whatever. I'm there. So thank you, Jessica, and thank you all for joining us today. Have a great day and Happy New Year.